I've spent lots of time in Southern California. Over the years, I've visited the coast communities, including homes of dear friends and my business partner, Laura McCreary. These places became sanctuaries where laughter and lively conversation, peaceful memories enrich my days. To see these cherished places ravaged so much by fire, truly heartbreaking. My deepest sympathies and thoughts are with those whose lives have been so upended. And my deepest gratitude goes to the brave firefighters, risking everything to protect what still stands. Now is the time that we must come together and support those in need.
Good morning, good afternoon, or good evening. I have no idea what time you're watching this, but it is 2:28 p.m. on the East Coast, Sunday, January 12th. It's 3:30 in the morning, Monday morning, my wife's birthday today on over here. I'm not gonna be jokey, jovial, or any of that stuff because what's going on over there in California is devastating. It is. I was talking about it with people over here, and everybody says the same thing. We would much prefer a flood than a fire because the fire just fucking wipes it all out. We've got over a dozen people I know of that are members here, quite a few of them that I spoke with over the last 4 or 5 days that are in that LA area. The IPO is in that LA area, and I was told that they were told to evacuate on Friday. So yeah, it's pretty rough, and I hope that all of your contacts and family members that you know of over there are doing the best they can, because that's a shitty situation. So let's get on with this. I'm just going to give you a brief recap. I don't know how long that brief is, 5 or 10 minutes. It won't be 5, but call it 10. And I'm going to look forward. I think that the looking forward portion of this will be somewhere between 10 to 15 minutes. So if all you're doing is day trading, then that's all that you want to concentrate and focus on. Just click the like button at the bottom of the video there and go fuck off about your day, because none of this matters to you. So, earnings. They begin this week. They begin on Wednesday. Wednesday is JP Morgan, Citibank, BlackRock, the demon of the earth, Wells Fargo, Goldman Sachs. And over the course of the rest of the week, there really isn't much, okay? It's just a follow through. The beginning of earnings is not really that euphoric, other than your first day when you get JP Morgan and a couple of the larger banks. Everything after that is just kind of like a follow through, and we don't start getting big names until next week. We get a couple. Typically, I don't know the schedule, but used to always be that you would get Netflix and Tesla the week after banks, and then the week after that is when we start getting into the heavyweight tech stocks. So earnings kick off the beginning of this week. On Wednesday as well is going to be the CPI report prior to the opening bell, January 15th. So Wednesday is going to be a big buckle up buttercup kind of day, because prior to the opening bell, everything is going to be out there. Everything will be very easy and very visual, that we will be able to not have to think about what's going to happen, because all of it will already be there in front of you. However, here, I'll give you this clip right here.
But basically, the market is, looking, and we said this since middle of December, for something like a 10% type decline here, peak to trough. We don't see this initial decline as we do see it as the beginning of a bigger decline, to be clear. But we do believe after this initial decline, there will be a counter trend rally, and that counter trend rally will be will be sold eventually, and will in our view lead to a bigger decline here as the year goes on. Will that be a bottom here in the next couple of days? Potentially, we could get a real big decline today into Monday.
So there you go. You want to know who Sem Karsan is? You are really missing out if you don't know who this guy is. He is probably the best predictive analysis out there, and you see him on CNBC all the time. You see him on the Schwab Network all the time. I'm referring back to a tweet here that he sent out, or that was sent out on November 29th of 2024. Is it Jam Croissant? Can you please shed some light on this? When does the SPX fill the gap it created with the election results? And Sem replied, January 13th. January 13th is tomorrow, Monday. So, yeah, pretty much. So, anyway, let me kick you off here again, because we're going to go backwards before we go forward. So your email that went out, jobs week ending January 10th, that everybody got, well prior to the opening bell, because it was sent out on Sunday. It gave you your little brief rundown, obviously, because we were in a bounce mode. The reason I share the 60-30 gap above as we closed at the 50-day moving average at 59.42 with 58.30, so significant below, is for those who want to risk the upside, which I see multiple requirements needed in order to satisfy that. And I was telling you to be careful about your upside move, that upside move that that you got there on Monday. So going back and considering still the way that this all went down, thus for today, I've shared two risk trades. The 59.50, 59.45 calls, which were at 250. This was going into the Monday, and the 59.75, 59.70 calls, which were at $1.30 when the email went out. But where I'm concentrating on here is when we start talking about QQQ and NVIDIA. With NVIDIA having the CES report that was being done there on Monday after the market closed on Monday. So, couple in the extreme overbought, 4 hours shown, and you have a reason to look at the January 10th NVIDIA 145 puts. Well, let's pull those up. Is this it? This is it. This is the January 10th NVIDIA 145 puts. They opened on Monday at $1.84 and just sank down to below $1 all during the course of Monday, because as you know, Monday was our up day. You spiked to $10.67 there on Friday morning as NVIDIA took the absolute shit, and you closed the week out at $9. So you can do whatever kind of math you want to do on how much was there on that trade on the January 17th NVIDIA 145 puts. They opened at 315, took a sinking all during the course of the morning there on Monday, down to around $2, so call it $2.50. $11.09 they spiked to on Friday, closing at $9.50 with a week left on that. So again, going back to the same email, which everybody had, for very obvious reasons, going out much further than January 10, January 17th is prudent for very obvious reasons. This is more applicable to those who trade NVIDIA regularly than for someone to just go and throw shit on the wall and hope it sticks because they read about it here. NVIDIA is plus 9% of the QQQ. QQQ is where I have kind of tried to shift everybody's attention over the last 6-8 months due to the magnitude of QQQ. With QQQ gapping up as of 3:13 a.m. Eastern Time on Monday, I'll be watching the pricing at the open on the buy the January 10 QQQ 520 puts and the buy January 17 QQQ 520 puts. And as we go and type this in, Your January 10 QQQ 520 puts opened at 278. I'm sure a lot of you remember me referring to the pricing on this. Dropped down to $1.50, spiked $16 on Friday, closed at $12.48. The January 17th 520 puts opened at $4.96. This is what I specifically referred to. Dropped down below $4, spiked to $16.68, and closed at $13.55. The reason I mention having looked at these and mentioned these in the chat room was because, as you saw there in the chat room, I went out once again on the March 21 QQQ 500 puts. Scrolling down here, this is, that was the chart there from Friday, but here, this is the third time I'm in these, still have one unfilled gap above, I put 529.60. 528.61 is still my alarm for getting into the February Marches. I like what I see. Made 50%, 80% on the first two times played these, and I'm still expecting the number one downside target to produce the number two within this time, which minus 494 for 471 gap to be filled. Right over here at 9:35 in the morning on January the 6th, we were right up here at 525.62, which was the reason why I got into them for a third time. Friday, I sent you out your take your profit alarm, March 21 QQQ 500 puts, and I will go ahead and just give a look on that because, again, I think that there are people that are trying to pick and roll on what they feel or think might be the best. 0321 P500. Oh, I typed it in wrong. I apologize for wasting your time. Give me a minute here. I didn't need a minute. I only needed a couple seconds. So again, on Monday, I got in at 850. As you can see, the price sunk down below. So I need no commentary about, I couldn't get in at 850. Yeah, because you could have got in cheaper. The March 21 QQQ 500 puts on Wednesday. You remember, might have been late Tuesday, but I know it was on Wednesday, something like that. I told you all, yeah, you're up 30%. You're up 30%, you're up 30%, which is what our target level is. On Friday, you reached up to 83%, and you closed well above 50% from the entry, and you had your profit alarm for a reason. Come back onto the SPX, because as you saw there, on Monday, we opened at 59.82, ran up to 60.2104. Where did we go to? Trade of the week. The January 10 SPX 6010 6005 call credit spread at $3. Buy the Friday January 10 6010 calls. Sell the Friday January 10 6005 calls. They are $3 here. You do have your unfilled gap just up above. So anyway, those, as you saw, came down. And again, I got to correct myself. Yeah, it was January 6th. So there you go. Here, the trades for the week. Where are we? Yeah, going in here for the month on the spreads. Monday, January 2, 59.45, 59.40s, 100%. 58.60, 58.65s, 150%. 59.50, 59.45s, I had left. I had mentioned, I had spoken about it. I had left. It was Friday. I'm done. I don't need to be here anymore. 59.50, 59.45s, 100%. 58.65, 58.70 puts, 100%. These are full credit. 60.10, 6,005s over here on Monday, 150%. Did we do? Yeah, we did that on Monday. The 59.80, 59.75s, 233% there on Tuesday. Wednesday, you had the bullish puts, the 59.05, 59.10s, 150%, which, again, a lot of people were scared about because of where we were going into the close. And where did we close? We closed at 59.18.25, so these were full credit. you had your trade of the week, the 6,010, 6,005s, 150%. And then on Friday, because of the way that we went out there, and on Thursday, Jimmy Carter Day, issuing out the jobs report, showing you the trend of the jobs report, 59.15, 59.20 bullish puts, $253. On Thursday, I give it a 75% chance it works. As we were there, did you get this on January 10th since the markets are open on close, right? Yeah, because people were going. And then we had the news that came out later that Donald Trump's sentencing was going to be placed there on Friday. So I was giving you a warning there, that, hey, be careful here. 58.94, 9:13 at night there on Thursday. Things were starting to look a little bit better. You still got that Trump sentencing subject to it at the opening bell. 2 o'clock in the morning there on Friday. We are going to see a little bit lower here, and then at 3 o'clock, things started to look a little bit better. 6 o'clock, we were only down a couple of points, and right there, 6:15 in the morning, Friday, we went green. We were actually green, and then the jobs report came out. So all things went into the shitter because of that jobs report. So, yeah, you had that one, but again, pulling it down and going through with your general math, because it's fucking math. So here you go. You have your $250 you made there on January 2 on the calls, plus your $300 on the puts, $250 on the calls on January 3, $250 on your January 3 bullish puts, $300 on your Monday, January 6, 6010, 6005, 0 DTEs, $350 on your Tuesday, January 7, 5980, 5975, bullish or bearish call credit spread. Add $3 on your Wednesday, 5905, 5910s. $3 on your trade of the week. Not $3,000, $3. And then your failure there on Friday with the 59.15, 59.20 bullish put credit spread having been destroyed prior to the opening bell, minus $250. So one contract, trading the trades each day, one contract, you're up $2,550 for the month. And we are on 6 trading sessions. This is why I've discussed this with a few of you new guys, trying to get your feet wet, trying to figure out, how everything works best for you. Forget about the money. Do one contract. Do one contract for the whole month of January. Learn the system. I don't mean learn the system as if this is a brand new system, but learn to build the consistency. Learn to build the momentum. And as you're building that consistency and building that momentum, you will start to figure out how this fits best into your own daily schedule, since there are much more important things to be doing during the day than trading, and you can start to adapt. So anyway, over here on the SPX, come over 2 green weeks in a row, like I warned about as we were heading into this week. Put in that high right there on Monday, which was absolutely beautiful, and from that high down into the lows there on Friday, we not only got our red week, we had a 213-point range for the week, which is actually the entire month is 213 points, 60.21, 58.08, and we are down minus 1.29% for the month. Big red close there on Friday. Friday red closes don't tend to be bottoms. So as you saw over there from Semkar San, that he's talking about January 13th being where the bottom is. The bottom being the Trump gap filling, which is 58.65. Sorry, 57.83. 57.83 being where the Trump gap is. 58.08 where we bottomed out there on Friday. You don't need to be a rocket scientist to do the math and be able to figure out that there is a tiny, tiny little bit of downside that is left. Come over onto our QQQ, and again, having had two green weeks in a row, both of which were doji candles, just like over on the SPX, 30 points, 21 points, you got your sell-off. You got your sell-off, and you came down to 503.92 with my warning and my profit-taking area being there at 507.31. And where did we bounce to? We bounced almost up to that 507.31 into the close with a big down day there on Friday, down 16.83 points on the week, down minus 1.38% on the year or on the month, after having an almost minus 4% down day there on Friday. Bye-bye NVIDIA, bye-bye tech stocks, bye-bye all of it. I think that's pretty much all that we're going over on here, other than the IWM, which just ate a big, huge bag of dicks there on Friday. The gap down, the loss of that support that it's had ever since going back to the beginning of November. And here we are trending in the second supply zone, which if you look through, you have been in this 215, 216 region going all the way back to September OPEX. 4 months supporting in this region. And here we are again. And not only that, but like you said, you have your full moon here on January 13th. Monday morning is your full moon. The full moon window is a plus or minus 3-day window. So that, once again, brings us into, let's go look over at the charts. So, Friday, you're open here at 58.90.35 and smack down right to that 58.68.52. After you failed and you lost that, and you had your little bounce, and you had your little failure, and you kind of went nowhere into lunch. Not that 58.7, 58.07, 78 is anything significant besides having come down to this little green line you see here, which is the 100-day moving average. But as I issued to you over there in the spread room, because again...
But I tried. I actually fucking tried. And that's more than most people ever do. And I will never apologize for how I tried.
Yeah. Bang, 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 bang. Your January 2 gap is filled. 58.68, 55, 58.30 is already here. Upside game is over now. 100-day moving average at 58.20. Boom, boom, boom. 58.68, 52 is now the primary resistance. 10 o'clock in the morning, throwing that out there. As we went into the end of the day, talking about 58.68, 52, 58.81, 63, your upsides. Your problems, as I pointed out there at 1 o'clock. 58.68, 58, 58.68, 50, whatever the fucking number that is. Again, that being your upside pivot, 58.68, 52. I said it right. And that's what you got over there into your 1-minute chart, looking there into 1:30, 2 o'clock, right to 58.68, 52. And then you failed. And then from there you failed and you fell down, came down to the 100-day moving average. And what does it mean? What does it mean? What does it mean? Tell me what it means. What are we going to do? Well, here's your drop. You're 60.21 all the way down here to 58.07. Your entire month is this range right here. This is the entire month of January, and tomorrow's the full moon. So let's go look at this. So looking at this and having tried to discuss that, yeah, it looked as if we've got a pretty clean bottom. As we were going into Jimmy Carter's funeral after Wednesday's trade, we did have a nice little bit of support with that higher low that we put there on Wednesday, lower high that we put there on Monday. Everything was looking pretty hunky-dory, and then all of a sudden you got your jobs gap and your sell down. So the view that I have on this still, again, I am all in with Sem Karsan. All in. But I'm giving respect for 2 reasons, and I'll show you those, that still viewing this as possibly being the bullish wave 4 dip. before proceeding on to the bullish wave 5 to complete all of this move, which began in October of 2022. A, B, C for the big wave A, and where do you come down to for your 100 extension, where your wave A, wave B, your wave C would equal your wave A to make this a wave A, is right here at 5782.08. I'll bring you back. Not trying to be an asshole in any way, shape, or form. I'm not. But I want you to be able to see this stuff. And where is our Trump bottom, or our Trump gap? 5782.76. Your 100 extension is 5782.08. Fuck, I forget what movie that is, but I got a movie reference in my head. So anyway, looking at this again from a zoomed in point of view, you got a nice ABC, ABC, and here is your 1, 2, 3, 4, 5. So it looks very clean, yet again, that we have come very close, if we have not already done, placing the bottom for this initial wave. As we progress into earnings, as we progress into the FOMC meeting at the end of the month, before the next catalyst for whatever direction it's going to be, but I'm still leaning to what I've stuck with, the downside. Come into your full moons. Here you are. Your full moon is Monday. This is an art. It ain't a fucking science, but you go back and you pull up an SPX chart, pull up a QQQ chart. Go back as many years as you want to go, and every time where we have the full moon being on Monday, look at +3 sessions, -3 sessions from when that full moon took place, and I will bet my right nut, since, fuck, I don't need any more kids anyway, that you will see a very distinct top or bottom being placed. Here is our full moon. Full moon's going to be being placed here on Monday. This is something else I want to point out to you in a little bit, so pay attention to this. This October 27, Israel invades Gaza bottom, when the SPX had dropped minus 10.92% from the July 2023 highs. Pay very close attention to that. Come in over here on the SPX and looking back as to where are we? Here I'm referring back to the major dip that took place in July of 1998. Now please remember, in 1998 there was no online trading. It was a different fucking world 25 years ago, 30 years ago. But you also had, and I was referring back to this because of what I'm looking forward to, this is when you were having the 1998 Fed rate cuts because of the global currency crisis. We had a rate cut. We were already in decline, and then they started cutting rates, and that was where we got our bounce. We had a 22.5% decline going here into October of 1998, and then a run into the beginning of 2000, and finally placing the high. And you can see here, beginning of 2000, sell-off little dip right here into January 5th. A little bit of a bounce back up to where we started, and then the sell down here into the end of February. Then you had your bounce up here to the all-time highs at the time, the .com highs, 1552.87, a 68% increase from the October of 1998 bottom. And everybody knows what happened after the .com top. I reference you over here to the top placement over in January of 2022, which I think the majority of you were already participating with. We placed our top here right at the very beginning of the year, which happened to also be the all-time high. We had our dip, initial dip, into January the 10th. our little bounce going in here to January 12th, January 13th, and then your big sell-off. Coming here into, does anybody know what this is? February 24th, 2022? Anybody? 4,114.65? Anybody? This is the day that Russia invaded Ukraine. And you got your bounce, just like when Israel invaded Gaza. Bounce up here into the March highs, and everybody knows what happened after March of 2022 until October of 2022, which another one I want to reference you to, October of 2022. So here, again, looking at your SPX and looking at this from a zoomed out view in a very clean, non-distinct kind of pattern, how I had 6,982 was where my top was due to be. We still have here a 1, 2, very complex move up to the upside for what we consider here still a wave 3. And as long as the SPX is holding up above this wave 3, right over here at 56.67, holding above this area, is it 56.67? Yeah, 56.67. We still have to give respect to it and consider it to be bullish. That's what we have to do. That's our job. We have the big bottom over here prior to the election at 56.89, 56.88. We're not far from it, but again, you've got your gap over here at 57.82. You've got your C equals A extension being down there at 57.82 as well. So for all algorithm purposes, 57.82 very much should be where we wind up bottoming out come Monday or maybe even Tuesday. And then we're going into CPI and earnings on Wednesday with the FOMC at the end of the month. Your VIX. I'm sorry, but this isn't an aggressive VIX. It's not. Getting fractionally above 1811, playing around with 19, it's not an aggressive VIX. It simply isn't. And come out here and look at your VIX over the last 5 days. I might have to zoom out here a little bit. Yeah, there you go. Having come here on Monday, where we dropped down to 1571, basically here on Tuesday until the opening bell, that was your aggressive move, Tuesday into Wednesday. But then here on Friday, you just did not show the distinctive characteristics that one would expect for such a horrible, sell down in the market. And we're just teetering here in the 19 range. So again, the VIX, it simply agrees with the same thing as Sem Karsan, same thing as I've got, which is we're there. We're there. QQQ. Your all-time highs right here, December 16th, the amazing FOMC meeting sell down, and when you look at this and zoom yourself out, ABC for your A wave, ABC for your B wave, AB for a first A wave, ABC for your C wave, and as you can see here, what looks very clean as a 1, 2, 3, 4, 5, as we came down to 503.92. You might be able to see here I have an alarm at 503.52. And when you zoom yourself out, this is where your... Is that it? No, that's not it. That's not it. This is where your 503.52 alarm comes from. This is your high back here in July before the 16.86% sell-off on the QQQ. The SPX sold off 9.7% in that sell-off. I think I have it here if I zoom out, and I do. 9.7% decline in your sell-off here in July into the August bottom. Since then, what are we? Up 18%? Maybe it's a little bit more than 18%. I got to go refer back to my spreadsheet. but that was a 9.7% decline. So I can leave here and finish you off with, again, a bigger, broader, wider view. The end of 2024, we ended the year 556 trading sessions since we had had a minus 20% correction. We ended 2024 295 trading sessions since we had had a minus 10% correction. Now, without having to do too much, with 6,099.97 being the all-time high that we know of, let's just say 6,100. If everybody's cool with that, just so we have a round number, 6,100 times 0.9, 54.90. So I bring you back over to your charts. And here is your 54.90 right there. Right where your minus 10% line is. Right here where your resistance was going into the end of June. Right where you found resistance on the dip, your middle portion here in July. And right where your support was back here in September. 54.90. So after the bounce that we should wind up getting as we go into the FOMC, remember that number there, 54.90, because I'll remind you about it when the time comes. So anyway, everybody, I hope that you enjoy your weekend. Again, conspiracy theories or whatever they are, shit happening over in LA, that's just some bad shit, man. And snow, floods, hurricanes, typhoons, that's all able to be managed. Tornadoes, fires. This is why, as you can see, with all of these people that are now homeless in LA, why I've had such a passion doing what I'm doing, because the children that are homeless over here, they never had an opportunity or a choice. At least the adults have somebody that they, or may have somebody that they could reach out to for a little bit of help. So enjoy your Sunday. I will see you in the chat room on Monday. Again, my wife's birthday being tomorrow, I will not be participating in the early part of the morning, but I will make sure that I am online after all the drunk people go to bed and I get some peace and quiet. So sometime late after the opening bell, prior to the European close, I should be online. So I'll see you guys tomorrow.